How's it going, everybody? This is Jason Ostrowski, and welcome to another edition of the Everything Real Estate Podcast. In today's episode, we are going to touch upon all things title with the president of Trident Land Transfer Co, Lisa Dewolf. When it comes to title, I feel as real estate agents, there are things that we know, things that we think we may know, and things that we do not know. So in the conversation today, we're going to delve into the standard title policy as opposed to the enhanced title policy. We're going to talk about title reports and what to look for on there. We're going to get into some red flag issues happening out there on the title side. We're even going to have a quick fire round that is going to be very relevant to your business and how to fill out agreements of sale with certain title issues happening. So let's dive right into the conversation with Lisa, and we'll pick it up on the other side. I am here today with the president of Trident Land Transfer Company, Lisa Dewolf, and I think it's about time that we had someone from Title on the podcast. So Lisa, how you doing today?
I'm doing great. And it's funny that you say that because I remember, I think you had Bill Stewart on at one point, and I was like, geez, how come no one asked me?
I know. Well, you know what? I call these our Eat Your Vegetables episodes, right? And whenever we get into like the mortgage side of things, into interest rates, into title, into conveyancing, those kind of things, those are things that we need to know as agents. And sometimes we don't know enough as agents, and therefore we need this information. So thank you for coming on today. And I want to start with the basics. Okay. Yeah. So I think the biggest basic question that we get asked by our clients is when it comes to the standard title policy as opposed to the enhanced title policy. And sometimes we're left a little tongue-tied because we know a little bit about the enhanced policy, but maybe we don't know enough. So can you start by stating the differences between the standard title policy and the enhanced title policy and why our buyers should opt to go with the enhanced title policy?
Well, yes. So the standard title policy is unlike all other insurance policies. The standard policy protects a homeowner from the time that they acquire title. The deed goes on record. They now have acquired title back in time. So it protects them against, any clerical errors we made, any search errors the searcher made. Did we miss paying a mortgage? Do we have a settlement error? Things like that. Going forward, the enhanced policy, to the contrary, has those protections. In addition, it has future protections. One of the big things is, and it's on everyone's mind, is fraud. Okay. The standard policy will protect against fraud in the chain of title. Okay, I sold my mother's property and she did not know it. Going forward, the enhanced policy protects the same type of fraud, but after the fact, post-closing. So after settlement, I know that my mother paid cash for her property and she has 100% equity in there. I refinance that property and cash out. And now there's a mortgage on it. She still owns it, but I have all the equity out of it. That's one of the biggest things. And it also protects against building permits that may not have been applied for and issued by the township when, say, basements are finished. It also provides for an inflationary coverage. So as the property increases in value, so does the title insurance coverage. So if you pay $100,000 for a property today, in 5 years, it would be worth $150,000 and your policy coverage would be worth that. So they're the biggest two things. It provides the future coverage. One other thing I'll point out is I get a lot of questions about title lock, right? Your clients are calling you as the realtor to say, do I need this? It says that, somebody can steal my property. What title lock does is it will alert you. It will monitor the public record to see if your property had anything recorded against it, whether it's a mortgage in the example I just gave of cashing out on equity or transferring the property, selling it to another person. But it does not protect you against the legal it doesn't give you that legal coverage you need to help resolve those issues. It just tells you that it has happened. And with the enhanced policy, you pay 10% upfront in Pennsylvania, 10% of the original premium, and 20% in Jersey and Delaware. And it's good for as long as you own the property or as long as your heirs own the property.
You know what's interesting about the enhanced title policy is I've had clients, I mean, this is rare. Usually they opt for the enhanced, but there are a few individuals that think it's like ridiculous. And I just never understood why you wouldn't protect yourself for the future. And I think encroachments are on the enhanced policy as well, right? So, I mean, you have those scenarios all the time, you know?
Yeah, encroachments are not across the board. You know, you're not protected. It depends on whether the neighbor is encroaching on you or you are encroaching on the neighbor. Okay. So if your neighbor is encroaching on you, you would have had to obtain a survey, present that survey to us, and we would then present it to our underwriter, and they would double check to make sure to see what is there. And they would tell you in advance if an encroachment exists. And then you have the opportunity to negotiate and correct that issue with the seller of the property or the neighbor. The flip side of that is if you are encroaching on someone else's property, there is protection in that, but there are deductibles involved, and it involves some real research by the underwriter and the searchers. So it's not as cut and dry as some of the other things, but the fraud protection, I think, is huge right now. You know, it's something that's should be considered when someone is stealing equity in a property, and we have data on this. It is typically a family member.
That doesn't surprise me.
The claims that our underwriters see is typically a family member stealing.
Well, and that's usually who's dealing with the property, right? It's a disgruntled family member. I could see in the state you got, all kinds of people involved and they want to get their hands in the cookie jar, or maybe it's an elderly parent and the kids is stealing equity from it. So I could totally.
We've had it happen. I mean, we've had it happen. We've had, a son, we meet somebody and this ended up being a claim. Our settlement officer, we're trying to be accommodating, goes to a nursing home. She's selling the property. We go to closing. We issue the proceeds check in the name of the seller. And then a couple of months later, we receive a call from one of those agencies where they appoint I forget the name of it, but somebody who helps you go into elderly care and things like that. And they wanted to know what happened to this property and where this money was. And we were like, oh my God, did we make the check out to the right person? Thankfully, we did. And then, so we didn't get hit with the claim, but then they went after the son of the owner because he had stolen her proceeds. That money was due to the nursing home.
Yeah. Right? It's such a shame, but I could see these scenarios popping up time and time again.
They do.
And I'm glad that you brought up fraud, because my second question to you is that this is a little bit different type of fraud, but we see so many scammers right now that have gotten so good and so diabolical with some of these emails, whether they're spoofing, someone that works for Trident or another, title company, or there's phishing attempts or spear phishing attempts. And some of those emails that we receive look really legitimate, and they can fool an agent pretty quickly. And it's really scary to think that there are potentially hundreds of thousands of dollars on the line with wiring funds back and forth. So I think it's really important to reiterate to our agents how that process will work if we have clients that are planning on wiring, say, earnest money deposits or proceeds from settlement, and what that process will look like coming to the agent from the title end of things from Trident. Like, how do we go about, for instance, everything is encrypted, right? The wiring instructions will put certain things in the room. Can you just speak to that and the do's and don'ts of the wiring instructions?
Absolutely. So there's a couple of things. So I'm going to speak first about Trident Land's, the way we distribute our wiring instructions. We upload them to our secure platform, which is called the Exchange. When we receive a title order, everyone is invited to participate in the Exchange, and that is where we upload documents. The buyer and seller can share documents with us. we will never, ever email our wiring instructions to anyone, ever. We don't want them out in paper. They are just uploaded to the exchange, and the buyer can go in there and look at them and get the information that they need. If the buyer were to pull those wiring instructions, say, out of DTR, out of the transaction room, or out of exchange, once they have them in their inbox, if you as an agent pull them out and you email them, they're out there for the world to see. Now, here comes your scammer. So they are typically watching this transaction. Okay. You get for sale signs on properties. They know that, Jason Ostrowski has this listing. I'm going to watch it for a little while. It's probably not going to stay on the market long. It's in a hot neighborhood, right? Now they're watching your emails, and now they see that you have a contract. Now they know who the parties are. They know who you're dealing with at Trident. They know who your conveyancer is. They know when settlement is because they're getting the settlement notice, and they know who the closer is. So then they start spoofing, and they will send instructions to the buyer, instructing them to disregard all other communications relating to how to send your money to closing. This is what we need you to do today. We had this experience only like 2-3 weeks ago. And the buyer, I got a call, I was driving down the road, driving to the office, and I got a call from the administrator of this top team. And the sales manager, the buyer thinks that he wired to the wrong account. Why do you think that? They pull him into the call. Long story short, he went and wired the money. And his bank questioned him and asked him if he had verified the wiring instructions. And the reason they questioned him was because the title of the account was a foreign individual name, and Trident Land Transfer. And, that person was like, this just doesn't look right. Yes, I verified the information. He wires $240,000. Now he's on the phone only an hour and a half later, because I think that when he left the bank, he knew he didn't verify those instructions and went back and looked at the emails, and it was clear that it was fraud. He was able to get that money back because it takes a little bit to go through that process. Had he wired that money the day before, that money would have been long gone. Gone.
I can't even imagine how that would feel. Just as an agent, I wouldn't be able to sleep. I wouldn't be able to eat. Like I would just be beside myself if I had a hand in that. So that's why I think it's so important that we talk about it now, because this is deadly serious. Deadly serious.
I mean, I wasn't responsible, and I was sick in the stomach. I was shaking until this was resolved. Like, my God, and as realtors, when you're meeting with your customers, you have to talk about this all the time, whether you represent the buyer or the seller. And, I'm a big fan of bank checks. I'm a big fan of, look, if you're not coming to closing, let me FedEx your proceeds check to you. Because, what's a day? What's one day? And you just have to talk about it with your customers and let them know, if all else fails, before they initiate any wire, they are looking up a known telephone number, not the phone number that's in the email of the person who said, send your money to me. Go to the website and look up Trident Land Transfer's phone number and ask for the person who you've been working with, and verify those wiring instructions before you send that money. It's too risky otherwise.
Yeah, please do. And I'll just tell you, like, just personally, my wife always makes fun of me because I'm an old school guy anyway. I write checks for bills still. She thinks I'm like, 85 years old. And no offense to the 85-year-olds out there, but
my husband does that too.
Yeah, I just like to know where the money's going. I like to have that paper in my hand. I don't altogether trust the automatic systems. And I think, for safety's sake, I know that I typically tell my sellers, I will bring that check to you from closing. If you signed a deed package, then I will bring you the check after closing, because I feel much more comfortable with that check in my possession than potentially having a scammer get their hands on that money. So,
and we're seeing a rash of attempts right now, and they are zeroing in on certain agents and they're just monitoring, right on the heels of the experience that I just shared with you. That same agent had another client who received the same email. And I know up in one of our regional managers up in the Bluebell area, Jess Mealy, she's been dealing with a rash of attempts as well. So it's not something that you just hear once in a while. It's not something that happens to somebody else's relative. It happens.
Yeah, you have to be extra vigilant right now. And
look, if it takes a little longer to get something or do something, we have to be responsible with people's private information, with how we're transferring money back and forth. You need to take time and care when dealing with these things.
Yep, absolutely. Or else it could be a whole world of hurt for you, the brokerage, and everybody involved. So
absolutely.
So, okay. With that said, I wanted to get into the title report, because I think that's another place where as agents, we kind of, we get the title commitment, we kind of glance at it, we see things here or there. Experienced agents will know kind of what to look for. But I wanted to just talk about the agents who are newer to the business and what they should look for on a title report when we get it. So, I know as an experienced agent, I want to look at Schedule B. I want to see if there's any judgments. I want to see if there's any outstanding mortgages or any weird stuff going on in that section. Can you just speak about what, as agents, we should be looking for when we get that title report?
Absolutely. The title report is your roadmap to a closing, and what the buyer is paying us for is to clear that title. Everyone should look at every single title commitment, and they should know how things are being addressed. So it is typically the seller's listing side's responsibility to clear the title requirements that come up on B1. Schedule A is going to give you factual information. It's going to give you the record owners' names. It's going to give you our buyers, how we expect them to go into title, the owner's type of owner's policy they're going to purchase, also the lender's policy and the amount, respective in terms of owners and lenders, owners being the sale price, lenders being the loan amount. B2 is going to give you the list of requirements, the things that the seller has to prove to us so that we can remove or make sure that certain things will be satisfied of record. So we're going to want to know what, taxes, we're going to want to verify real estate taxes for the current year and the previous 3 years. We're going to want to see what mortgages are against that property, judgments that are against that property. All will need to be addressed. We're looking for prior owner things, red flags, prior owner mortgages. Typically, a title company will simply write for a letter of indemnity to the title company who previously insured it. And you get that letter and you can typically go to closing. And we go one step further and we send that old mortgage to require or to fast tracks to make sure that mortgage gets satisfied of record, because the buyer's paying us clear title. We don't want to have to keep indemnifying that, year over year when it gets transferred. B2 are all the exceptions that run along with the property. That's where your rights to your utilities are. That's where your restrictions are. Your conditions, setback lines will be listed there. Typically, title companies do not share automatically the attachments, the detail behind each of those exceptions. You have a buyer who is planning to do any kind of major renovations, if they're going to put a built-in pool in, you absolutely will need to request the attachments to the B2 items so that they can read them and understand what those restrictions are, because they're typical claims.
Well, I think, as far as the title report goes, just an interesting kind of aside. So I am in the middle of something that came up on a title report that I've never dealt with before. And that was, I have a client who purchased a property. And when I was talking to the listing agent before we submitted our offer, she had just mentioned to me, just off the cuff, hey, this property was actually completely rehabbed and updated from Habitat for Humanity. Right. Mm-hmm. And I said, oh, wow, they did such a great job. It's awesome. I can't wait, for my people to potentially buy this property. It's great for them. We go under contract and we get the title report, and lo and behold, Habitat was the mortgage lender for the property, and they actually put a right of first refusal in the mortgage docs, unbeknownst to everybody that came up. And it almost sabotaged our deal. At first, Habitat was going to enact this right of first refusal, and my clients were just beside themselves, and I was beside myself, and I had to plead with a lawyer for Habitat for Humanity to reconsider. It had to go to a board, and at first they rejected us, and then they came back and said, okay, we'll sell to you. But it was a very, very, very unique situation, and it came up on that title report. So you always, always, always have to check the title report, or there could be a satisfaction piece missing from a mortgage, and time to clear that. You always, always want to check your title report.
Yeah, that's a very unusual situation.
Yeah, that was the first time that happened.
Yeah, even like your condominium, sometimes they have the right of first refusal. They typically don't act on it, but they're out there, and then you have to write to the association for them and have them waive that right, which means going to the board, who meets like 30 days after your closing is supposed to be, right?
Yeah, but, it's nothing's quick.
Typical unsatisfied mortgages or home equity loans that are paid in full but not satisfied of record. Many times current owners have home equity lines of credit that they never even used, that their bank just gave to them, and they didn't need it and they never thought about it again. And now, it's 30 years later, and now we're trying to get it cleared up. So that's one of those other things that could delay.
Yeah.
And when you find a title company who is going to look the other way and make a business decision to not address those kinds of things, they don't go away. So when your buyer purchases title insurance, they're not really getting clear title if those things aren't resolved. We owe our buyers, clear title when that's what they're paying for.
For sure. And, being a former manager, used to come across certain situations where, in certain places, certain title companies would look the other way. Yeah. And I would tell our agents, like, that is a very, very, very bad idea. There's a reason why Trident is highly regarded. Yeah. It is because they take all the precautions that won't cost your clients down the line.
Right. Right. And when we get in trouble, sometimes when we get in trouble, when someone's not happy with the way we're doing something, it is typically that, because whatever we're asking for will cause a delay in settlement. But, it's important that, it's not all about speed all the time.
It's about
doing the right thing.
Yep. So, I totally agree. All right. So at the opposite of slowing things down, I'm going to do a quick fire round with you right now.
Okay. Right? Oh, I hope I can answer fast. I tend to ramble.
I think you'll be all right. Trust me. This is not something that is going to be too complicated, but for agents, it may be complicated. And this is why I quickly want to go through this. So there are some common issues that agents always have to deal with from time to time that would affect the way that agents would need to fill out the agreement of sale. So, for instance, I'd like to quickly go through a couple of scenarios here. So, first scenario, there are two buyers that will be on the deed, but only one of them is on the mortgage or, qualifying for the mortgage. Right. Do both buyers need to be on the agreement of sale in that case?
Both buyers should be on the agreement of sale because both buyers are going to want to be on the deed. And in which case, both buyers will be on the mortgage document, which is really the security instrument. It's not your personal obligation to pay back the loan. That's where the note comes in. So the qualifying borrower or buyer will be on the note, but both parties will be on the agreement of sale, the deed, and the mortgage document.
All right, perfect. All right, so scenario number 2. There are two sellers in public records. One of them recently died. Okay. Who should we list as the sellers on the agreement of sale?
You could list them as, I'll assume it's me and my husband has passed. So it would be Lisa Dewolf, widow. That will indicate that when we order title that my spouse is deceased.
Okay, perfect. All right. Scenario number 3. Both sellers have recently passed. The will has been probated.
Mm-hmm.
Who should we put for the seller, and how is this agreement signed?
It's going to be the estate of the person who most recently passed, and the signers will be the executors of the estate or the administrators if there hasn't been a will probated.
I'm just keeping track.
Or there's no will.
I'm just keeping track of my score right now, and I do have to say I got these all correct so far.
Oh,
so
good.
I'm going to pat myself on the back here. All right, so last one. For an LLC, a corporation, or a trust, what do we need to do, or what do we need to provide to the title company, and who signs the agreement?
Well, the title report is going to dictate the required documentation, but it's going to be the entity documentation that was created to form each of those entities, depending on what they are, whether it's an LLC, partnership, or corporation. And then we are going to require the agreement that tells us who has the right to sign. So each scenario will be different, but it will be outlined on the title commitment.
All right, perfect.
Here's where we run into trouble with entities, such as the three you named. If they're not formed in full, and the partners are not fully informed on what it means to be a partnership or an LLC, they get all their documentation, they form the LLC, but they do not follow all the way through and open up a bank account in that name. Now the title company wants to issue a check in the name of the LLC, but the individuals want the checks made payable to the members. That's not how it works, and that typically turns into
I just recently
an awkward conversation.
It was an awkward conversation, but I was like, look, this is the way it's going to be. I'm sorry.
Yeah, and so as a listing agent, if you know you're dealing with an investor and that's how they're titled to the property, ask them, hey, have you created a bank account in this name? You better do it, because that's where the proceeds are going to be. How they're going to be titled.
Yep, without a doubt. Okay, so I want to get into just a couple things that are relevant to title right now as we speak. What are some red flags that you're seeing right now in the marketplace that, maybe they're different, maybe they're the same as before, but what are you seeing out there happening on the title side right now in terms of red flags?
When I went back and was looking, like, what are the red flags that we're seeing today? I mean, they're not a whole lot different than the past. We're seeing a few more mortgage foreclosures than we've seen in the past. They're starting to percolate up. Estates are always an issue with when we're trying to determine what to escrow, especially if the estate doesn't have it's not solvent. People don't want to hold anything. They don't want, because there's nothing there. They don't want to file the inheritance tax. If we simply hold a small escrow, we're then stuck with the escrow, and we're stuck dealing with the state trying to, make it all happen. You remember years ago when we would simply take a letter from an estate attorney saying we're handling the inheritance tax filing and payment. Mm-hmm. Well, when the market collapsed in 2008, we are left with all this money. All these attorneys went out of business, and the underwriters said, no more. We're not doing that anymore. So we are still in the process of cleaning up years worth of estate issues. And I'm telling you, we pay money out because we didn't hold enough money, because we did a favor to get some deal to the settlement table. Thousands of dollars.
It's funny you're talking about this. My very last question to you is going to be, are escrows the bane of your existence?
Oh, they certainly are. They can be. Well, I'll tell you, they're the bane of my gatekeepers.
Yeah, there you go. I know.
She hates them. But they're necessary. And you made a comment when we were talking about the standard versus the enhanced, and some people will think that it's just like, title insurance is bogus, right? What do I need this for? We use the term peace of mind, sounds frivolous, right? But when you have a title problem and you need to fall back on that title policy. So when you purchase a title policy, it doesn't mean that you're not going to have a title claim in the future. Well, what it means is, if it's a valid claim covered under the policy, the underwriter will assign an attorney to that case to resolve that issue, whatever it is. And if you don't if you never have to deal with anything like that in the future, is because we did our job, right? We did our job. But it doesn't mean, even though we do our job, that there isn't something hidden, something that we missed, something that a searcher missed, within mortgages. So, if you need it, it's valuable.
Well, it's like being an acrobat and you're on a high wire and you don't have a net underneath you, right? I mean, that title insurance provides that net for you.
And it's a one-time fee. One time.
Exactly.
It's not an annual fee that you pay year over year for like your car insurance.
I never understood if someone was paying cash for a property and they wouldn't get title insurance. It just does not make any sense. Luckily, if you're getting a mortgage, you're going to need it. But,
Yeah. And we typically don't insure those deals because we end up being liable anyway. A court's going to look at us and say, you're the experts, you should have known.
Yeah. It's pretty crazy that people fight and kind of, it's penny wise and dollar foolish, right?
Sure.
Because that's going to come back and eventually bite you in the future.
Yeah.
Okay. Last question to you, and then I'm going to let you get out of here. So I know that you were on vacation.
Yeah.
And it states on a website that I was looking at that you like to fish.
Oh.
Maybe that's not accurate.
You know what? I do like to fish. And I fish on that trip every year.
Yeah. So what is the biggest fish that you ever caught?
Oh, I caught in 2020, I caught a 10-pound walleye.
Nice.
A walleye.
Very
it
nice.
was like standing up from foot to up to here on me. And, it's like a treasure fish. So they say all the guys their goal is to catch a walleye. And here I come along. I'm like, Bert, I think I have a fish, but it wasn't fighting real hard. He's like, no, you're snagged on something. No, I feel some wiggling. I'm reeling. And sure enough, he's like, holy crap.
Well, over time.
I didn't get anything, though. I didn't get anything.
Well, over time, that 10-pound fish is going to turn into a 15-pound fish in 10.
I have a photo. It's somewhere on Facebook. I have a photo.
Well, I also read that you like spending time at the beach.
Love it.
That's fair. So where is your go-to spot down the shore?
Ocean City, New Jersey.
All right.
Yep. Has been for years. Yep. Mm-hmm.
All right. So that's good. That's good to know. We're total beach people too. So we tend to love all the shore points down there, but we really love Cape May. So, and we love
Cape May.
So.
Yeah. I have family down there.
Well, Lisa, I'm going to let you go. I really appreciate your time. And this was great information because there's things that I didn't know in our conversation today, especially, for example, when it came to encroachments and how those are handled, right? So I hope that there is a takeaway from all the agents listening out there from your conversation with me today. And I look forward to seeing you again at some point in the future, probably at some company function. I hope
so.
All right. Well, listen, have a great day. Thank you so much for your time.
All right. Thank you, everyone. Call me if you need me.
All right, Lisa. Thank you.
Bye.
Bye. That was the interview with Lisa Dewolf. There certainly was a lot of information packed into that episode. Here are a couple takeaways that I had from our conversation. Number one, the standard title policy as opposed to the enhanced title policy. We get a lot of questions about that from our clients. So if you need a reference guide, go back and listen to the beginning of this podcast. Lisa talks about what the enhanced policy will cover as opposed to the standard policy. And also, just general rule of thumb, the standard title policy covers what happened in the past prior to ownership, where the enhanced title policy will cover what's going to potentially happen in the future. That is one good way to think about the difference between the standard policy and the enhanced. Number two, we talk about title reports. And again, if you want to know what to look for on a title report and you can't quite remember, go back and reference this podcast again where Lisa talks about title reports. Look at the different schedules. Schedule B1 is usually what you're looking for as an agent to see if there's any liens or judgments, any funky mortgages, any HELOCs, anything that stands out to you that you need to rectify prior to closing. You're going to find on those title reports, so make sure to check the appropriate place when they come in. And last but not least, and I think most importantly, there are scammers out there everywhere nowadays. So please, please, please protect yourself, protect your clients. If there is something to be wired, remember that the instructions for wiring will always be through an encrypted system. They are not going to come through email. Make sure to verify everything and always be on the lookout for people trying to spoof someone from Trident. You have to be aware of these things. You have to be extra vigilant nowadays, or it could cost you and your clients hundreds of thousands of dollars. And that's the last thing that you and I want on our resume. Well, that's it for the podcast this week. Thank you for joining us. We'll be back in another couple of weeks with a new topic, a new guest, and as always, if you haven't heard something that you want me to cover, please reach out to me, jason.ostrowski@foxroach.com. And if you haven't subscribed to our podcast yet or left us a review, please do so. It helps us to reach more people. And until next time, this is Jason Ostrowski again saying stay safe out there, stay selling, and we'll catch you on the next episode of the Everything Real Estate Podcast.